Hello, fellow investors, traders out there. Casper here, and this video is a bit different uh, from what I'm about to do here. But first off, as always, guys, follow me, highly appreciated. And on a slight note here, I'm at some point I will be moving all my, the paid members on YouTube. That section will be moved to Substack. For different reasons. I just need to be sure when I'm ready to set it up. Then there will be some sort of transitioning period along that. I will let you know about the details. But Substack will be the place where I'll be posting all the paid stuff or for the members instead of YouTube. It's more easy for me at least to have it that way. Then I can post the charts and the videos at one place, and not to do it on YouTube and then on the private Twitter. It's a bit messy for me, to be honest. That will come here in the future. So yes, a different video. I had a thought today where I would like to show you some charts across the board really, and basically showing some of, at least from my point of view, there are more, but some of the most important trend lines that there is at the moment. So the charts will be a chart with one, maximum two trend lines. That is really, really important, for the very near future. And upon breakage, that could, change or define the outcome for many years to come, in my view. So yep, let's see where we are. I have roughly eight or nine charts. As you can see here, we have some oil, dollar, NASDAQ, copper, CCJ, Nvidia, gold to silver ratio. We will go through it here. So first off, we have the USD WTI. This is oil. Basically, one of the most important trend lines for oil is roughly here. You can see it there after the big breakout. We have that big retest coming up again, forming that trend line, and here we are. So a break upon that trend line, and oil could potentially do some serious damage, if you can call it damage, to the higher inflation that is potentially to come here. The reasoning is this is a very long-term macro setup here, where we have these three major spikes low. We add a line across there. Obviously, we have the COVID madness here. So, but again, we have a big macro pattern here, breaking out, retesting, and big breakouts, big retest, massive resumption. Again, this could point to oil to go to at least, what's that, 140-ish, and then potentially beyond. And can you imagine if, let's say, oil doubles from here, what that would do to the input cost to companies, for gasoline, all that good stuff. That will be, in my view, the potential start of the second wave of inflation. That is potentially upon break here, we will start to see headlines, when we're near, something somewhere around 2026. There's usually like an 18 months delay or so before we get these high CPI prints again. Maybe 18 to 24 in that range. So again, very important trend line here, that one there, the breakout resistance trend line here, the highs, connections. So it's going to be very, very interesting to see what happens there. And if you look at some of the bigger oil companies and gas companies, they are setting up for a massive move. So that is again a sign that we are probably going to break, into higher oil prices. So again, take advantage of that when that happens, in my view. We cover some great stocks on the private, on the members section. So this is the DXY. Also a bit of a shorter term stuff here again. That major peak there in September 2022. Connection there. So we have three touches there on the top, and the breakout here would be, could potentially lead to some big damages to more or less any market, I would say, with a rising dollar here out of that triangle. Again, that could potentially lead to some pain ahead. Also, if we break to the downside, we have the lower trend line here. Some people say that that is an inverted head and shoulders. Yes, but again, we are still within a range. So again, I'm not saying that it doesn't have any value, but again, usually if it's within a range, I wouldn't put that much detail into it. Again, that's just my personal opinion. But a breakdown here again, and we could see some big dumps as well in the dollar. We have the big support coming in around here at roughly 90. So again, massive triangle there on the Dixie. Again, a break to the upside will have consequences in other markets, and likewise to the downside, obviously in the other direction for some period of time, depending on what market you are in. Silver, I think you know what I'm about to show here on silver. I want to remove the band because I just want to have a one trend line chart. Boom, 2011 high. There it is. Then we have that massive surge out of the 2020 sideways action, and you can see we are actually just peaking above there. That's the silver squeeze. Can you imagine? It's been 3 years. Wow. Bit of a peak there, a bit of a peak there, and again now we're actually trying to break out again. So if we want to make it perfect, it's not a one-liner, but again we copy that one, paste it to the top there, and you can see perfect. Boom, boom, boom. So what this means is if we break this, let's call it a rail or a channel, very, very small. And again, as you know, getting above that 26 to complete that, that massive inverted head and shoulders here, silver will shift into a whole new gear that we only see, once every decade, more or less. It will be moves like that, like this, and like down here. So it will be moves that, that does, all the upside, in 5% of its time here. It's just going to be massive. I want to show you what triggering event that could lead to. So this is silver long term. And I've been posting this many times and talking about it, but again, here is like a very brief update on the silver chart. I'm very bullish silver upon breakage 26. The reasoning is massive cup and handle. Yes, you've seen it tons of times here. So a break there will lead to a triggering event, as the market sniper would say, where you all of a sudden start to have short-term measured moves that triggers medium, measured moves, and then triggers long-term measured moves. That's at least how I see things. So, and why do I say that? The reason is we have a massive move up here, right? And then we basically have some sort of weird bull flag right there, a bullish consolidation, whatever. And then we add it on top, and roughly we get to, again, roughly 50 or 44, depending on how precise you want to be. But again, that's a triggering event. Also, you have a smaller trigger upon the break of 26, which is the neckline, meaning from that inverted head and shoulders. So that will trigger the move to roughly 40. And then, we had the 44, meaning we're getting very close to the 50. And what will happen upon the break of 50 is you will engage this entire cup and handle. Again, during the measured move there from the bottom to the top on a log scale gives you roughly $650 silver. That's a very, very high number. But again, if you take the value or the move in dollar terms instead, you get, that's a 44, let's call it $50 move. So 50 plus 50, that's 100. So in my view, when we trigger this cup and handle, my bear case is 100, and that's a very low ball call in my personal opinion. When we get to 100, obviously that will be heavy resistance. But again, I do think this will trigger, and over the next 5, 10 years, whatever, we can actually see a potential full-blown move here from that massive 50-year-long pattern there. And if you are to believe, in patterns and measured moves, you get roughly 600. Again, so I think this could be one of these moments in time where you start to trigger a lot of upside potential when we get above 26 due to the smaller patterns. Smaller patterns leading to, longer term triggers upon breakage. So silver, again, 26 on that trend line. You know me, I'm very, very bullish. Will this be the time? According to gold, yes. According to gold, yes, this is the time. So as long as gold does what it does right now, staying above that, what is it, 2,100? It's all very fine for silver. Very, very fine for silver. So that's silver. Onto something very different than NASDAQ. Ooh, the good old NASDAQ. Yes, goes back 25 years. And as you can see here, clearly, we are coming into the apex of a massive rising wedge here below the trend line there, connection 2009 low, 2020 lows. And then we have that, correction low there in 2023. And now on the other side, dot-com bubble, the peak, after we had that major March 2020 low, the peak, and now we're very close again. So let's see what happens. Basically, we have this tiny triangle here. If you have, as I think you have guessed it, if we start to come down and we start to roll over, that's not going to be funny at all. That is a given in my view. Also, we could be in for that if we break to the upside again, then we could be potentially in for a massive surge. But usually, if you have a rising wedge like this and you break to the upside, you will have a massive spike, only to come down and to undo it all. I see that all the time. So again, here very big. This is a bit of a longer term play, right? Just like the silver, but again, very important trend line here on the NASDAQ. Very, very important. That trend line, obviously. And then we have the lower bound, which comes in and be very important when we get there, if we get there. Copper, the good old copper. Yes, this is the copper futures. Shorter term trend line here broken. Right there, bullish consolidation breaking out above the $4 range. And I say range because we have been in a range here between 4 and roughly 3.5, and we're breaking up to the upside here. Again, pointing to higher copper prices, overall inflation, higher gold, usually silver follows, and platinum and all that good stuff. So copper here with potential, some very, very big moves ahead. In my view, we go to the triangle fill there, which is $5. And then we could actually see a scenario where if it goes full on, mega bull, that you can actually see a touch of that trend line. 1, 2, 3. So if we get to there, let's say and then we hover, then, into 2026, 2027, depending on the speed, you could actually see $7 silver. Again, that is a massive move. And you could argue that this is just some sideways action, even though we had that massive drop there. So again, you could actually see that move coming up to there as well. So copper, if we hold these levels here for like a week or two without going back below 4, the trajectory in my view is set for a lot higher copper prices, and that would be in alignment with silver, as mentioned, higher gold prices, and potentially the lower Dixie. Platinum, the good old platy, again, is the laggard here. Usually it lags gold. And gold right now is showing the way in my view, as mentioned. But we have a massive 2021 high there, a bit of a connection there, false breakout, connection again, and here we are. And why is this line important? Basically because it is a inverted head and shoulders. There it is. So if we start to break above, let's call it 1,000 roughly here, clearing that neckline, then platinum, in my view, will join the party and will go for a lot higher prices. You can also see here 2008 high coming down there. So basically, we are just hoovering, retest, bear flag. So, and you can see we're just playing with that level all the time. So again, here, a breakout here will confirm that inverted head and shoulders, which again should trigger, a long-term move into 2,200 for that triangle fill right up here. Again, not tomorrow, not in a year, but, within, this decade easily, depending on the speed and all that. But still, platinum is working on it here. It's lagging still. But looking at the miners, some of them are starting to potentially put in some big buy levels with the setup that is currently in play in some of these, which we also cover in the paid members, by the way. One of the big ones for me personally, because this is related to gold and silver, I love gold and silver, is the gold to silver ratio. The reasoning being, again, this is kind of like the silver chart in my view. A break on this line here will trigger, projected moves to the downside that again will trigger a longer term, and a longer term. This is just magnificent here. Again, I have been showing this many times also. 2011 low, meaning the peak at that bull market, and then we have April 2021 here, and we're basically grinding it right up here. And why is this line important? Because upon potential breakage, you can start to see here, if we zoom out on the weekly, let's do the monthly, might be easier for you to see. I've been showing this Fibonacci extension here a few times. You take the high there, 2020, to that low there, to that move high there. Basically what this means, if we start to break here, in my view, is that we will have a triggering event that leads to a move down to right here. Not directly, we have a lot of support on the way, but again, the 1.618 fib is the exact level as the 2011 low in the ratio. Very high correlation. You can see that it's basically dead on. And again, at the end of the bull market, you can see here the 2.618 right here is identical with 1968 and the absolute low there in the ratio in 1980. Also, you have the 3.618, which is in the single digit. It sounds crazy, but it is in the single digit, and that's actually the ratio of which First Majestic gets silver up from the ground compared to gold. They get, roughly 7 to 8 ounces of silver per gold. Again, I like this alignment with things, and that's why I think that if we break there, we are entering a whole new paradigm when it comes to commodities, gold and silver. Yes, platinum, copper, just commodities in general, especially hard metals. I'm very intrigued by this here. Good. Here we have CCJ. So that's Cameco. That's the blue chip of the uranium market, basically. We have a trend line here going back to the bottom of March 2020. A lot of the trend line starts with that absolutely massive low there, March 2020. I want to go to the weekly because it's a bit more detailed. You can see here, basically, this is a bit of a longer term. We have some shorter term channels as well, but as you can see, the March 2020 low, we are touching there, and now we're basically here again. So ideally, we don't want this to break for Cameco. We want this to make new highs. So very important moment in time here at roughly 38, 39, depending on how good you are at drawing that trend line. Maybe we should have it there, maybe. So basically, we're maybe touching it now. Again, don't, it's depending on how good you are at connecting the exact low and all that. This is just a quick draw, but we are at that moment where we need to see Cameco, start to bounce here. You can see we're having a daily bounce here. 1% doesn't mean anything. Also, we have maybe a potential tiny, falling wedge into that. Usually that's good, but again, we need to break and get above 42 roughly to say, okay, this might be, the next move higher. And also, we have the long-term macro breakout here. You see 1, 2, 3 lows, and then we blasted higher. So again, overall, this is very bullish still because we have had that mega channel there, massive breakout, and we're just grinding it higher. So ideally, we hold here. If we break here, I'm not calling for that's the end of the Uranium bull market, but that leads to that we potentially could see, a visit down to roughly these highs down here at roughly, let's call it 30, 32. There they are. That's the latest correction in the latest big correction in CCJ. So important line here. If we remove all the clutter that I added, a simple line says it all. Very nice. Also, if you, again, I could talk about this for ages. If you add it on top there, you have some sort of you can see it there, a parallel channel there. So if we hold here, that could potentially be that we go in 2025 and visit that upper trend line. So important moment here for Cameco, very, very important. Last but not least, Nvidia. Again, I haven't been involved in Nvidia at all. The reasoning being, I think it was too biased to believe that it could go higher. I was very intrigued here, but I saw this as very bearish. If you zoom in, there are some inverted some head and shoulders and all that good stuff. So I was very biased and I didn't join it here. Again, that's an opportunity missed, but I'm not going to enter at these levels. The reasoning being this one trend line here. In my view, this is, again, it's very difficult to time the top, but again, if you go on a regular scale, this is just absolutely going hockey stick to the upside. So in my view, we have like a first move here, like a first wave 2, 3, 4, 5. Again, massive resistance here for Nvidia, and we are very close to that $1,000 level. Again, going from 3 digits to 4 is always a big resistance, or going from double to triple digits. These even numbers always has a huge role, and we are basically a tad below. We almost touched the $1K mark. So again, very important trend line here for Nvidia. And if we were to add the trend line here to here, potentially, just like we saw on Tesla, or maybe a seeing on Tesla, I don't think we have touched yet that. But again, if this are to play out, this pattern, right, you could potentially, get a move where we would actually touch that lower trend line if we cannot seem to break higher, or at least just consolidate sideways before potentially go again. So the reaction here is very important, what happens on that trend line. So yeah, that's it. Again, some a different view here, different markets. Again, these are just some of the trend lines for me personally that is very important for me to see hold or break depending on the chart. So yeah, I hope you liked it. It's again, I haven't done this before, going across the board with a one trend liner, but yeah, here it is. I hope you enjoyed, guys. Have a great day, and tomorrow we have Friday. Let's see where the market takes us. Let's see, guys. Have an amazing day. Bye.